Basically, the myth from the previous cycle was that institutions were coming, but they never actually materialized. This is what I would refer to as macro 2.0. I mean, they arrived towards the edges. Virtually all hedge firms deal in Bitcoin. Certain entities would carry it out. For instance, businesses lack the intestinal fortitude to follow Michael Saylor's lead and fund their corporate treasuries with Bitcoin. Nothing about Bitcoin ETFs caught our eye. This cycle will continue as long as Bitcoin ETFs are permitted, and once again, these institutions see another high point that makes them reconsider their beliefs in Bitcoin. In my opinion, there is need for greater institutional standardization and the establishment of allocations rather than merely narratives surrounding the topic. Just 2 days into the year 2024, Bitcoin shattered the $45,000 mark, marking a new annual high and the first such occurrence in nearly 2 years. According to data from CoinMarketCap, the cryptocurrency has seen a tremendous jump of over 6 in the last 24 hours and a spectacular 170 growth over the past year, following a quick ascent from $42,000 on January. Coinciding with this price boom, market expectations for the possible approval of the first spot Bitcoin ETF in the US have risen. At this time, 14 applications are still pending a decision from this. According to statistics from TradingView, the last time Bitcoin's value was above $45,000 was on April 5, 2022, nearly 2 years ago. This was right before Bitcoin entered a protracted bear market that caused its value to fall to as low as $15,600. Lyn Alden, a global macro investor, thinks that Bitcoin's resiliency will become more apparent in the future and views the current price movement as merely the start. The veracity of Bitcoin's monetary value will soon be established, she stresses. Alden continues by talking about Bitcoin's future possibilities, especially as it relates to commonplace enterprises and other industrial processes. Check out the decades-long treatment of gold by traditional pools of finance. Therefore, according to a number of studies, if we garnish an otherwise portfolio of stocks and bonds, the returns after adjusting for risk are superior. This is due to the fact that decades in which bond and stock markets perform poorly often see gold perform well. That asset, for instance, is either not correlated with the 1970s or the 2000s, or it is differently correlated. Even if it was still not widely accepted in traditional pools of capital decades later, having that rebalancing chunk in your portfolio was useful, wasn't it? Consequently, there are a few objects on the outskirts whose sole purpose is to attract funding from outside sources, correct? Therefore, there is still a degree of suspicion, even when it is occasionally external funds wrapped in an internal one. I agree with you that the last cycle was all about macro, but I also think it helps to moderate it. For the upcoming cycle, I'm considering 2 options. A second, which I'll refer to as macro 2.0, is the idea that institutions were supposed to arrive last cycle but never did. Hedge funds would trade Bitcoin at the margins, certain entities would carry it out. For instance, businesses lack the intestinal fortitude to follow Michael Saylor's lead and establish Bitcoin corporate treasuries. Nothing about Bitcoin ETFs caught our eye. Therefore, in this cycle, if some of these Bitcoin ETFs are approved and these institutions experience another high that makes them rethink Bitcoin, I believe that there could be more institutional adoption and allocations of Bitcoin rather than just narratives about it. Well, I suppose that counts as one. Second, the proliferation of these micro-Bitcoin communities is the one that most excites me. Bitcoin Beach is a prime example of this, although there are others such as Bitcoin Jungle, Bitcoin Lake, and Bitcoin Acacio. I might be mispronouncing that. My prediction came true. Yeah. A woman named Dia has been running the Bitcoin Indonesia conference for, 2 years now. Along with others, Friday has been running the Africa Bitcoin conference for 2 years. There are these little recurring hubs all over the world, especially in the most important markets, and I find them to be even more powerful than Bitcoin Commons, Bitcoin Park, Real Bedford, PubGuy, and similar locations in developed countries. There will be a greater critical mass in the next cycle, I think. Thus, this cycle was similar to the emergence of those, or at least the proliferation of those following the original handful. They keep tabs on how many of these small hubs they detect, and it's like an insane amount every quarter. I just did a podcast with Kathy Wood about it. There are a lot of these, but most of them don't get the same level of attention as the ones I listed. If we skip ahead 4 years, I anticipate these will be far larger and more numerous. If it does happen, I think it's one of the healthiest things. It's hard to imagine a more beneficial form of cycling than that. The other side of the coin, in my opinion, is this. It's institutional liquidity. Institutional capital is beneficial since it can increase Bitcoin network liquidity and mitigate volatility to some extent. Widening ownership to varied degrees has a rebalancing effect on portfolios and large pools of capital. Liquidity and volatility are both improved by that. However, the new self-custodial and community custodial hubs are far better, in my opinion. In my opinion, that is more crucial. Those involved in the project are willing to, let money flow. As an example, Reba serves as the foundation for the fiat money. Interest rates are the foundation. Credit is the foundation. It's founded on principles that, some religious interpretations would forbid. Plus, Bitcoin aligns better with those regions' monetary policy. Therefore, I believe that the Middle East as a whole has the potential to embrace Bitcoin. For the following cycle, I am unsure. I hope it comes to fruition. On the other hand, I believe that these hubs will emerge globally. As I indicated before, Bitcoin nodes are appearing all over the globe, and with that comes the need for any technology that can facilitate their expansion. Yes, precisely. Plus anything that facilitates that. Any system that gives communities the means to establish their own custody, create their own wallets, gain liquidity, scale in an environment with high fees, etc., is a good system. In an ideal world, none of these hubs would exist and users' Bitcoins would be safe with Binance or custodian size, would they? Something enormous like a honeypot worth billions of dollars situated outside of their jurisdiction and neighborhood. I believe it would be healthier to spread that around and give communities as much power as possible so that they can own their own Bitcoin. Custody is not, then, always a bullying issue. On the other hand, there are two extremes. On one extreme, you have sole custody, which isn't really severe, but it's still something to think about. One other side of it is that it's all into one massive communal honeypot. Then there's the spectrum. On one end, you want to push for self-custody as much as possible. On the other, you want to make sure individuals can handle the expenses and have enough time to work out a solution. But if you're looking for a middle ground, it's better to transfer custody closer to the community where the child lives, preferably even within the community itself, rather than to these enormous pools. In my opinion, that is crucial. I support any measure that strengthens Lightning. We'll keep an eye on developments with covenants and soft forks to determine if there are alternative scaling methods or if forks are really necessary. On the other hand, anything that shows promise in terms of scaling that can make working with Bitcoin simpler, cheaper, and more efficient without compromising its core values would be very appreciated. Because Bitcoin needs to succeed, not only in terms of its difficulty, but also in terms of, what user experience can someone have when they visit Bitcoin. What is the experience like for them when they utilize the asset? In my opinion, it has improved significantly. For instance, I'm not an investor in either the tap sign or nunchuck combination, but I truly appreciate them. But I think that's a great example of a UX sweet spot, particularly for lesser amounts. Therefore, I hope that further discussions, like how can we get OTSO spread out more, will emerge. What steps may be taken to bring the custody process closer to the individual?